Welcome back to What Do I Do with me, Jeff Lapidus, the retirement coach. This week I wanted to talk about what do I do with that annuity I inherited from mom. So let's talk about Joe, our favorite Joe. Joe's mom recently passed away. She had an annuity of $100,000. She happened to have a cost basis in that annuity of about $40,000. So she had a taxable gain of $60,000. Let's go to the board and talk about what Joe's options are. Again, Joe's mom paid $40,000. We call that the basis. Joe didn't have to pay tax on that part. The value of the annuity at mom's death was $100,000, and therefore the taxable gain in the contract is $60,000. Joe has three options to deal with his least favorite uncle, Uncle Sam, because as we know, at death, annuities required to be distributed in a certain way. So there are three distribution options. One is the most expensive one. We call that surrender. Joe sends the contract back to the insurance company, and he has to pay one time immediately on taxes on the gain of $60,000. That's expensive. Joe's second option is what he could do is he could take this money out over a 5-year period. A very cool option that's available inside the Internal Revenue Code, assuming there is anything cool, or you think it is that way. In which case, Joe would take out $20,000 per year. What Joe does, however, is he has an advantage here. He can, when he takes that money out, he will take it out in a way so that part of the principal will also be returned to him. In that case, $8,000 per year would be considered principal, and $12,000 a year would be considered taxable income. Much better of an option, right? $12,000 of taxable income versus $60,000 of taxable income. The last option is required minimum distributions. Joe can take this money out over his lifetime, and that can be important, especially if he doesn't really need the money today. So let's say Joe wants to save that for retirement, maybe create a second retirement income for himself. Well, mom's going to help. Joe can take out 4% per year based on his age, and in that case, that would be approximately $4,000 per year. And he would do that all the way through his lifetime. So now Joe has three options: $60,000 of taxable gain, $12,000 of taxable gain, or $4,000 of taxable gain. You're to gain now that you have that information. You get more information just like this every Saturday from 10 to 11 a.m. when you tune into Straight Talk on Retirement on the Big 550 KTRS.